You talked about something. I want to come back to right people in just a second, but you talked about something underlining the importance of doing due diligence. So I'm doing due diligence on these operators. I'm building rapport with them. I'm building connection. I'm reviewing their deals, and I'm going out and understanding all of the intrinsic pieces that go into this to make sure that when I bring in my investors, that we're in this together. So walk me through your process, or what you'd recommend that passive investors or others would be looking for, because I'm sure that as you're going out and vetting these multifamily deals that you guys are going to do yourself, you're probably having some of these conversations. And I think it's important as a capital raiser to understand what that conversation might look like.
Sure. Good question. So what I look for, first of all, is I want to know the math. I want to really understand the math. Real estate is a math game. It always has been and always will be. There's obviously a lot of other components that are important, but I want to understand the math, where they came up with those numbers. And I dive really deep into the assumptions that they make. Real estate's also a big assumptions game. And so we're just what I mean by that is we're just guessing. We don't know how much it's going to snow in New York, upstate New York next year. We have no idea. So should we budget $5,000 for snow removal or $500 for snow removal? I don't know. It's a judgment call. And you can't always, and this is interesting, but you can't always take the most conservative approach, because then every single deal in the world is going to not work out. Nothing will work out if you always take I'm afraid it's the worst case scenario, the world's melting down. You can be conservative, but you can't always say, well, it could be anywhere between $500 and $100,000, if a hurricane hit. Let's go 100,000, because it just doesn't work that way. So you have to balance that of where are you practical and where are you conservative. So I want to see where they did that in their numbers and how they came up with all those things. So I'm a math nerd. I spend a lot of time on math when I'm looking at those kind of deals. But also I spend a lot of time, we look at the team itself. And this is what I advise other people, is look at the team itself. Do they have the right people on the bus? Are they in the right seats? What are they doing? And do they have trust? Do they have credibility? Do they have I didn't feel like as an operator, or as the syndicator, I didn't think I had enough credibility. And I hope people understand, I'm the guy that wrote the book on rental property investing and all these other books. And I'm on the podcast and I have a lot of trust, but I personally don't think I had the credibility to take down 500 units this year. And maybe that's just limiting belief, but I had not done anything over 50 units. So I was well, if I went and bought 500 this year, that's a lot of work. So what did I do? I went and grabbed other people's credibility, like Brian Murray, who's bought thousands. I said, Brian, let's be partners. Let's work this together. Ryan Murdoch, who is one of the best. He owned a property management company and ran a big real estate company. He's legit guy, right? I brought these people in, and now it's not just me, it's the team again. So if you're going to raise money for somebody, you got to go and make sure that their team is solid and they have the experience needed to be able to pull that out. So yeah, between the team and the math, those two things, I'm going to really dive into. I'm not sure if that answers that question, but that's
100% answers it. So I think we're going down this path. It's starting to make a lot of sense. So we've built the trust. We are, we've got a great deal. We've got the awareness. We're out there. We're talking with investors. What's the conversation when we're talking to folks about investing $100,000 or $500,000 or $1 million into a large deal? And I know that it's a little bit different than when we're talking about just this little fix and flip, but it's probably similar. I'd love it if you could kind of compare and contrast the two.
Yeah. It's an interesting conversation. And I'm glad that Mike has to have it more often than I do, because investor relations guy, but I do have to have it. I have to have it a lot. It's just what we try to do is just we tell the truth. And that's the main thing. We just tell what we're doing, and people get excited about what we're doing and about progress. I don't have to try to convince somebody to put money with them. All I have to do is tell them what we're doing and they get excited. Now there is some marketing involved with that. I'll talk about that in a second. But really I just tell them what we're doing. I'm this is what we're buying and here's why I like it. And this is why I'm excited. And people will feed off my excitement. If I tell you I like apartments because, rent comes in and stuff. Nobody's going to want, but if I'm no, here's why I love mobile home parks, or here's why I love this thing, right? Because if the economy crashes and people lose their jobs, what's going to be easier, to pay $200 for rent or pay $2,000 for rent? $200 a month for rent, they could go sell plasma and get enough to pay for rent, right? So I love that in a down economy, that mobile home parks are recession resistant. I love that. I think in a recession that we're going to be fine by owning mobile home parks. I'd be terrified of owning high-end rentals in this thing, right? So there's a little bit of marketing there, right? So I'm explaining why I like what I am, but I'm also passionate about it because I really believe it. I put my own money into every deal that we do because I really The whole reason I tell this investors, the whole reason I started Open Door Capital is because I make stupid money right now and I need somewhere to put it. Like that's just the truth. I make really good money and I need somewhere to put it. And I don't want to just stick it in the bank. I don't like the stock market. I don't trust it. I think a recession's coming, and I've been saying that for a year now. I mean, not that I'm a genius, just recessions always come, right? It's up and down. But I need somewhere to put it. So now other investors go, yeah, I make stupid money and I need somewhere to put it. You know, I might not say stupid money, but like the fact is I make more money than what I need to live right now. I have an excess. And so I had a problem and I solved it by putting it into real estate. I didn't trust a lot of other syndicators out there because I think a lot of people were in stuff that I was considering kind of sketchy in terms of like, yeah, you know, if the cap rate drops every year over the next couple of years and if we raise rent by 30% a year, man, this is going to be an amazing investment. And I'm like, is it? Like, really? Like, you're looking like rose-colored glasses. And when I say these things to investors, they naturally like nod their head. Yeah, I see that too. Yeah, that's a problem. Yeah, I feel the same way. I'm right there with you. So I'm not like this like high, like, you know, like I'm the king of the syndication. I'm like one of you. I'm in this because I need my money to grow. And I think there's a lot of value when you're talking to investors to approach it from that way.
Yeah, talk to them like you completely understand what they're going through. Like you understand the life that they're living and that they've got money and they're looking for a place to place it and they've got to find a home for it. And you happen to have a great home for them to place that money because you're placing all of your money there. And, you know, if it's good enough for me, I hope that it's good enough for you. But if it's not, no big deal and no pressure because we got more than enough people that are going to be coming in. So that makes a lot of sense. Do you, from a capital raising perspective, do you vet your investors? In other words, do you ever deny investors from joining a fund because maybe they're not the right fit culturally, or is there things that capital raisers should look out for on that front?
Yeah. So, I mean, we obviously, we do the legal distinction because we're a 506c fund. So we can only raise from accredited investors. We can't take money if you're not an accredited investor. So that's like an obvious, like that if you are not accredited, we can't take your money. I wish we could, we can't. Blame the government. Now, but beyond that, we would really only refuse somebody's money if they were just a pain in the neck. Like that's kind of like there's just people you just don't like working with. And that might be just like they're calling you constantly and harassing you and giving you a hard time. And like they're I don't call them nitpicking a deal because I've had some investors really want to dive into their numbers really, really carefully. And that's fine. It's actually kind of nice to have those people because they keep you honest. But there are people that are just not worth it. Like Tim Ferriss is big on this in the 4-hour work week. Is like, it's okay to fire your customers. It's okay to say no to money if it's going to cause you more headache in the long run. And that actually reminds me of something you said, or you said a second ago, and I wanted to revisit was that like, I don't ever want to appear, and I'm not like desperate for their money, because when you're desperate for money, you're in the weaker position. And so not only do I not show that I'm like desperate, I really am not desperate because I believe that there's lots of money out there. I have a very abundant mentality. And so when I first started raising money, when I first tried to raise money, this is like 4 years ago, I was trying to raise money for like it was like a fix and flip or a small multifamily. I can't remember what it was. And I went to some friends of mine. I was like, hey guys, I got a kind of a good deal and I really need some money for it. And I really wish I had some for it. And they're like, oh man, sorry. Right. So I came begging basically. So what I learned is that if like when you are a syndicator or raising money for a duplex, I don't care, anything in between, if you're trying to get money from someone else, you are not asking for a favor, you are offering an opportunity. And like when I realized that I need to approach this from an opportunity standpoint. Look, I don't need your money. There's a lot of people. I've got a great deal. Deals are hard to find right now. I got it. I got a team that is made up of rock stars. I got this thing figured out. If you want in, great. We'd love to have you. And I do need money, but I don't need yours if you don't want to be in. And I'm not going to say it that way, but the attitude is one of, if this works for you, great. If not, I wish you well. Because it's got to fit with what they want. Some people just don't like mobile home parks. They hate them, and so they won't invest with us. That's fine. I'll refer you to my friends.
That confidence comes through when you're talking to them, and that confidence makes them confident. Thank you for listening to the Investor Mindset Podcast. If you like what you heard, make sure to rate, review, subscribe, and share with a friend. Head over to theinvestormindset.com to join the Insider Club, where we share tools and strategies from the top investors and entrepreneurs on how to take it to the next level.